really feel it's my time, think it's my year, yeah.
All right. Good morning, everybody. Happy Thursday. Yes, Thursday. I'm all thrown off by the holiday. Welcome to the morning show here on Stock Market TV. Spencer, JC, Steve, Alfonso with you as always. I'm going to be joined a little bit later by Chris Veron, who's the head of technical and macro research at Strategas Research Partners. We'll be on at 9. We'll have Sean McLaughlin on at 9:30. Come talk some options with us. And in the meantime, we'll talk a little bit Santa Claus rally or lack thereof. Lack thereof is probably more accurate. Another day of selling on Wall Street. So, that's kind of where we're at. We have some ideas, some charts, and some news today. First day we've had actual news in really quite a while. So let's go. It's the morning show. Smash that like, please.
Hey now. So, how about that Santa Claus rally? No show, huh?
So, is the bull market canceled?
I think so. Return. You're gonna get refunds on your tickets.
Yeah.
Yeah. That means we got to give all the profits back from last year.
No, but really, how do you weigh this?
Where does seasonality fit on the top 10 most important catalysts for us, right? Probably doesn't even make this top 10. For me, like we always talk about seasonality, it's more about when the market ignores seasonal trends than when the market follows seasonal trends. Like the market followed those seasonal trends perfectly last year, so there's no real signal there. I mean, it's just another day. The fact that the market started out weak in January is a seasonally strong period. It's been a seasonally strong period, and the markets have been strong. Let's see how they finish out January. Let's see how they finish out the first 5 days, right? Granted, a nice study. If you want to show it, do you have the Grant study there?
Which
Spencer?
one?
That one.
Here, I'll throw it up here. So it's slide. Oh, here it is, slide 2. There it is. So historically, it's mixed signals. So the thesis, the conclusion from Grant, I thought was hilarious, that the market could go up or down.
That's
for me,
big.
Strazza, yeah, right. For me, I'm more interested in the relative strength, right? The relative strength that we've been seeing during this period. Go to the next chart there. China, right? China rallying during this period. Financials, healthcare, energy, consumer staples. A lot of sectors did well during this Santa Claus rally period, which is interesting. A lot of the sectors that were underperforming last year, or I should say underperforming in the first 3 quarters of last year, and started picking up the pace in the fourth quarter, small caps, things like that, right?
Just in general, periods like this, right? These little waves of volatility or corrective action within the context of bull markets are the best times to do this and to look for some relative strength. Like yesterday on Hot Corner, we didn't do a ton of names. We just did a small handful of names. All of them broke out in the past few days, which really stood out, right? Breaking out in this tape, pretty good. So China, definitely same thing. A little weird, feels funny.
A little weird. But that's part of the signal. Like the fact that it feels weird, the fact that it's odd that of all things.
Yeah, you're right.
You know what I mean? Like that is weird. That is odd, right? You're right. But that's the point, is that this is interesting. The Dow Jones Industrial Average was actually positive during the Santa Claus rally period. How about that?
The Dow was?
The Dow was, yeah. S&Ps were down, Qs were down. Dow, the most important index in the world, was actually up. But this, traditionally this is an S&P 500 signal. But again, that speaks to the types of stocks that did well during this period. The fact that the Dow outperformed the Qs and the S&P 500, I guess shouldn't be surprising when you're seeing that strength in consumer staples. Healthcare in particular. Healthcare was up 3% during that period almost. And the largest component of the Dow Jones Industrial Average is healthcare. So I guess that shouldn't be a surprise, right? Not a lot of healthcare in the NASDAQ 100.
I mean, you really can't even call this a pullback when you look at the chart of Dow.
No. Well, you know,
Well,
it
why
reminds
not?
me of things like financials, right? Like we were talking about the strength that we've been seeing in financials. Yeah, 6% healthcare in Qs. It's actually more than I thought.
But then look at the way, small caps or tech has corrected.
All right,
Very
that's fair.
different.
That's fair.
Yep.
Some-
Well, nevertheless, happy Thursday, everybody. Why don't you hit that bumper there, Spencer?
All right, then. State of the markets.
2024, the year of financials, Strazza?
I'm so there with you. Yes, and it puts a smile on my face. I like it.
Why don't you throw up there slide 4?
Speaking of relative strength, right? How we doing?
Yeah, we're good.
What do you think?
I like it.
Is this here to stay?
Look, just like I was just saying about the Dow, look at XLF. With the way these financials have corrected.
You're saying how they corrected a year ago?
Nope. I'm saying over the past few days.
Oh, financials on an absolute basis.
Yeah.
Kind of like a sideways range.
Yep. And we have similar bases like this in banks relative.
KRE relative?
Yeah. KRE, KBE. Yeah.
Let's see.
And we all know about insurance. By now.
These insurance stocks absolutely keep ripping, man. And that's not a new theme. The fact that we're getting rotation into some of these financials and things like that, that's new into some of the banks and things. But the insurance stocks have been working. Capital markets have been working. CBOE has been making new all-time highs for 6-7 months.
Look at my interactive brokers the past few days here. How you doing?
Are we back?
Yeah, it's a big level there when you zoom out. But the point is there's a lot of good-looking ones.
And I think the big theme here is that the good-looking ones are new good-looking, right? It's not old leaders that are reemerging. It's new leaders that have been suppressed for quite some time, right?
Yeah.
Throw up slide 5 there.
Steve's going to restart his audio and video. Is out of sync. It was bothering us. So, insurance. Yeah, we talked about this yesterday or the day before. I don't remember.
I mean, this has been a theme that has been working for a long time. Even like the perma-bear gloom and doomers are pointing to insurance like, oh, this is to insure because of all the riots that are coming, right? Like even like the angriest losers in the market are still pointing to the strength in insurance. Like they're kind of flipping the narrative to suit their own prerogatives, right? But nevertheless, it's hard to ignore the consistent strength that we're seeing out of insurance, right? What's your favorite insurance stock, Strazza?
Oof. I don't know. I don't have one.
How do you not?
I'm gold.
I think everybody should have their own favorite insurance stock.
Brown and Brown?
Is that an insurance stock?
I think so. Marsh McLennan?
It's reinsurance.
Wait, dumb question. What's the difference
Between what?
insurance and reinsurance?
Reinsurance insures the insurance companies.
Oh,
Some business, huh?
That's some fucking business. And then it takes it another level. I think it's called retro or something like that, where you insure the reinsurance companies. It goes on forever.
okay.
I'm telling you, they stick the smartest mathematicians they can find in Connecticut. They stick them in Hartford, Connecticut, where there's nothing else to do, and they make them do math.
Package policies up.
They just print money, dude.
All actuaries.
Yeah.
I don't know how it works. I don't know anything about it.
No, that's how it works. They stick them in a room like Milton from Office Space. Have you seen my stapler? Like storage room B. They stick them down there, have them do math. They pay him a ton of money though. I don't think Milton was getting paid much.
No, actuaries do well. Sure.
Actuaries do really well. It's a boring job. And think about it. It's a super boring job that you need to be really smart to do. And they make a lot of money from your math. So they should pay you well.
Yeah.
You know?
Yeah.
I have a friend who's an actuary. Does very well.
Me too.
Yeah.
Strazza has a lot of friends that are actuaries, probably.
Well, it's a big thing at UConn.
That's probably right. Throw up slide 2 here. Here's my favorite insurance stock.
So what's the
Look at
group? What's the group?
I should have seen that one coming.
Come on now. Little Zervy action for you.
That's good.
Good about it. What's so good?
It's obscure and Swiss.
That's Zurich Insurance Group. That's what's good about it.
I guess. I mean, it's a $76 billion Swiss insurer. I guess I don't see the humor in it.
Okay.
Ticker symbol?
On financials, I dipped my toes in a little bit yesterday. Asset managers. That's where I was pitching. I know I've been talking a lot about them. So,
but you've been talking a lot about them because you should.
Yeah, they look good, huh?
Because you're not blind. You're not blinded by the light.
Let me mark up this ETF.
Throw up slide 2 here, Spencer. You can see capital markets making new 52-week highs, finishing the year strong. Look at that. And then look at the holdings. You want to zoom in there?
It's a little hard to see. Yeah, what do we got here? We got Coinbase.
You got Coinbase. You got Robinhood. But you got where my head is at is more Schwab, Blackstone, Interactive Brokers. Look at Hamilton Lane, Carlyle Group. Strazza loves that one.
So okay, all of these charts that we're showing that look good, right? Capital markets, insurance, healthcare, whatever.
They look great.
Okay, fine. For all of these, would the move be you buy it on weakness? Like what's the move here?
I think it depends on what you're trying to accomplish, right? In some cases, you're buying the breakout. Like in the case of Zurich Insurance, you're buying that breakout above 50.
I think it's a good question, and yeah,
it's a great question.
I
mean, listen, you could buy pullbacks if you want, if you get them. I think in the strongest ones, buying breakouts, I think makes a lot of sense too. Some of these asset managers haven't broken out yet. I think you buy the breakouts. We bought the breakout in UBS, for example, kind of. Maybe not the best example for this conversation.
On the ones that have broken out, you wait for the pullback. On the ones that have not broken out, you wait for the breakout.
Yeah, I think there's a lot of different opportunities, a lot of different setups.
I think like the best answer, it's just not realistic, is you wait for the corrective action to kind of slow, right? Stocks to find their footing at the index level or whatever group of stocks you're interested in, and then buy or get back in on some sort of upside momentum. Right, when you think there's a tradable low. But something like yesterday, I was talking about this Carlyle Group pulled back to its breakout level. That's it.
So then that same logic could I mean, it could apply to anything, but what comes top of mind to me is the Qs, right? You maybe wait a day or 2 or 3, for the market for the Qs to not drop, 1.5%, 2%, and there you go.
But are those the groups that we want to be in this year?
I don't think so.
I don't think so. I think there's going to be on I don't like buying pullbacks in the Qs at all. I like being patient with the Qs and buying a breakout back to new all-time highs, and that could take months. It could take quarters. So I don't like buying a pullback on Qs at all.
The all-time high was like 4 days ago, right? So.
And now we're back below those late 2021 highs. So that's invalidated. So it doesn't matter. So that's the whole point. So it was a failed breakout. So now you got people left holding the bag, and you know how bag holders like to behave, right? They're not thrilled about it. So there's dead bodies up there, and those dead bodies are going to remain up there until the market proves otherwise. And I'm not in any rush.
Is there something to be said for the fact that the Qs and tech more broadly, because it is the sexiest thing to look at and talk about, and has the best returns over the last 2 decades, that how do I phrase this, that tech generates the most bag holders. They get like who's chasing? How many people are going to chase the insurance stocks? You know what I mean? It's just not
smart institutional investors. I mean, listen, just because there's, a lot of these institutional investors can overcome the recency bias. The retail investor who doesn't know any better, thinks that, tech stocks are sexy and whatever, but investing's not supposed to be fun. Investing's not supposed to be exciting. Investing's supposed to be boring. Like if you're getting your excitement and you're getting your dopamine fix in the stock market, like you're in a lot of trouble.
right.
You know what I mean? It gets back to like, get your dopamine fix somewhere else. If it's watching women's basketball, like Strazza, or, eating Korean food, like Spencer, right? Get your
I don't
dopamine,
even like Korean food.
get your dopamine fix somewhere else is all. It doesn't even matter what it is. Strazza wants to break 85 this year in the golf course. That's where he's getting his dopamine fix. It's, it doesn't matter what it is. Go skiing, go hiking, go stuff your face with food, like whatever, anything but the stock market.
What do you do
For my dopamine fix?
Yeah.
I go running. I work out legs with Maggie across the street, I hang out with my kids. That brings me a lot of joy. Right. There's in the old days, I used to go out and get hammered. Right. When I, right. I mean, that's just what it is. When I lived in New York City and had no kids. Right. I mean, I would get my dopamine fix somewhere else. I'd go chase pretty girls, like, all sorts of, I was like on 4 softball teams. Like I had a lot of time in my hands back in the day. I would do fantasy football and like, things that waste your time like that. I had a lot of time. These days it's just different, but nevertheless, and this is something I've studied for a long, 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 long time. And it's very, very true. You don't want to get your dopamine fix in the stock market. That is not the place to do it. Do anything else. It doesn't even matter whether it's healthy for you or not. It doesn't matter. Get it somewhere else. So that's what I would say, Spencer. Not to go off on this psychological tangent over here, but
You could have fun though. It's okay to have some fun.
Yeah, like we have fun because, like, we think short squeezes are fun and hilarious, and like sector rotation is really funny.
They are,
and like and like everyone's an equally weighted index expert all of a sudden, right at the moment where the equally weighted indexes start to outperform. Everybody's a small cap expert. A small cap underperformance expert.
I will read headlines in the morning and just laugh out loud sometimes. Markets are just fun. You gotta have fun.
Yeah, but we find humor in places that others don't. That doesn't necessarily mean that we're getting our dopamine fix from the trading aspect and the investing aspect of the market.
We're lucky we like it because we're weirdos. How about this news from Eli Lilly? They're like, forget your doctor.
What happened? Hit it, Spencer.
Lilly Direct. Oh, you want me to run the bumper?
Yeah, run it, and then we're going to read right off this press release.
It's not really moving, but it is news, so whatever. Here, I'll bring up the release on the screen. How about that?
Yeah.
Lilly Direct. This is a new digital healthcare experience for patients in the U.S. living with obesity, migraines, and diabetes. Essentially, if you have one of these problems, you can go straight to Eli Lilly and they'll give you medicine.
Okay.
Through their own online pharmacy.
They'll get you a doctor to get you prescribed, and then more or less help you buy it with their different like savings programs.
Right there. Access to independent telehealth providers.
Yeah.
Yep.
And then they'll deliver it to your house for free. Typically, ordinarily, the healthcare system in the United States, you go to a doctor and a doctor tells you what drugs you should take. And then you go and you take the drugs. Now you can pick the drugs first, and Lilly's going to link you up with a doctor and make sure you get them. Pioneers. This is new, guys. Not interesting at all?
No,
I couldn't give a shit.
It is interesting. Do you know that?
What's so interesting about it?
This is not how it works.
This is
Come on. This is
it's not
different.
how the U.S. healthcare system works. That's for sure.
You think they give a damn about the U.S. healthcare
Do you,
system?
Clearly
do you know
not.
that do you know
Whole
that the U.S. and New Zealand are the only countries where it is legal for pharmaceutical companies to advertise their drugs on TV? It's only countries.
Yeah, I've heard this before.
They're actually the biggest advertisers in U.S. cable.
I believe it 100%.
They control traditional news stations. These drug companies.
Yeah, Cliff wants to know if we're in Eli Lilly puts. We're a put spread, by the way, Cliff. So you can go back to the notes. Everything's outlined there.
It's not working.
It's not working. I wanted to put on a straddle over the last couple of weeks, but it was too expensive. Remember it was just coiling. So going long a straddle there, but it's too expensive.
Stocks like this with so much buzz about them, they're in the news every other day. Everybody's talking about them. Honestly, I think the best advice most of the time is just stay the hell away.
So you don't want to do anything here, Lilly?
I don't know. Listen, I don't like the risk reward. I don't like it long at all, but
And Novo's kind of messy. There's
Short
better
is
opportunities
like
in
this.
healthcare, I think.
yeah.
Speaking of going direct to consumer for drugs, can we talk about Walgreens for a second? I think we have a chart. They had earnings this morning, but more interesting than that is their dividend, which they are dramatically reducing by a 48% cut in their quarterly dividend.
Okay. So this is good. Where's it coming from?
7.5%.
Okay. Every time.
No.
See it every time.
No,
Once
I'm
it gets up past 5, they're cutting. It's the market telling you they got to cut.
What are you saying no about there, Spencer?
I'm reading directly from it says 48% reduction from the previous quarter.
Right. So it's a 7.5% yield right now.
Oh, okay. I thought you were saying percent.
Yeah.
Yes, correct.
Yeah, 7.5. Wow. All right. So that's going to be more like 3.5, 4. Right? You said they cut
Basically, yeah.
Yeah.
Which is still probably pretty high.
Well, again, weren't we talking about this yesterday? Everybody goes to these places. They have little monopolies, and they still can't service their dividend.
This is part of the broader, strategic alternatives thing they have going on. So,
I don't know anything about that.
Trying to find value somewhere.
I just want to point out the fact, I don't want to overthink a morning's move, but kind of just in general here, bonds have been trading more with the NASDAQ than they have with the Dow. You're getting a mixed market between the Dow and the NASDAQ. You noticed? The composition of these two indexes are so different.
Yeah.
And it's not always apparent in the day-to-day moves, but it certainly is today. Let's take this opportunity and give a quick market rundown here. Early morning trading, Dow futures up 100 points today on the third day of the year. S&P futures are flat. Meanwhile, NASDAQ 100 futures down another 45 basis points. So you're looking at 70 basis points difference between between the NASDAQ and the Dow. 30-year futures down with the NASDAQ while the Dow's up 100 points. 30-year futures down almost 1%. Gold flat, silver flat, copper down 75 bips, oil up 1%, natural gas up 6%. And the dollar index, generally speaking, falling this morning with volatility basically flat and yields inching higher with bonds down. And of course, in the old funny money, by the way, dollar index futures are basically flat. Just want to clarify that. In the funny money, quickly, Bitcoin up 600 points, 1.5%, up to 43,500. The old ETH. Up 1.5%, 2250. Hanging in there, these things.
Both rangy.
Solana back at over 100. Total crypto market cap 1.62 trillion.
So, You talked about how NASDAQ 100 might take a while to really reclaim those prior cycle highs.
Yeah.
Can the Dow hold its breakout environment where the S&P and the NASDAQ can't break out?
Yes, but what I will say is that the stronger that the Dow is in an environment that the S&P and the NASDAQ are absorbing that overhead supply, the higher the likelihood and sooner that these indexes are going to break out also.
Yeah,
right? I'm not going to bet on a situation where the Dow's ripping to new all-time highs, making new highs every week, and the NASDAQ and the S&P are collapsing.
Right. But if the Dow is just holding these old highs, holding this breakout, we could see some sideways from all three at the same time.
Yeah, and the Dow can continue higher, NASDAQ and S&P consolidate, but if the Dow continues higher, then it's probably not pointing to a complete collapse in those other indexes, but more so just consolidation at a very logical place, and let's see what happens from there, right?
You get to pick one for this year. It's Dow, right?
Yeah.
Dow or Russell 2000.
Yeah, I could see a situation similar to the back half of 22. People are still saying that 2022 was a terrible year. Still. They haven't gone back and done the math where the back half of 2022 was actually great.
Yeah.
The entire back half of 22, pretty much everything was rallying except for mega cap tech.
International stocks too did really well in Q4.
Everything was working.
Yeah, but it's all about what you're measuring it up against. If you're measuring it up against the beginning of the year, it's not rocket science.
Well, that's my point, is that humans are lazy and ignorant, and they just assume that because the S&P peaked at the end of the year, that stocks had a bad year, but that's actually not true at all. The stock market bottomed actually in the first half of the year. The second half of the year was very, very, very good.
It just depends on what your definition of what good is. If good is all-time highs, or if good is just plain old just going up, period, right?
I mean, double-digit returns across the board in sectors, including equally weighted sectors. So broad participation to the upside. I would say good is understating it. I would say great.
I'm saying it depends how you define it. But look, I mean, for the people that were invested from the 2021 highs right there, or January 22, whatever. Yeah, you can certainly understand why they think it was a bad year. Could you not? Just like why last year was
they only think it was a bad year because they haven't done the math. They just regurgitate what they hear on TV, or maybe look at their portfolio and their mispositioning and just blame that the market was down, but it wasn't. Second half of 22 was great market.
Coca-Cola.
That was 2 years ago.
Coca-Cola.
Year and a half. Well, we're 18 months into a bull market. So yeah, it was a year and a half ago.
We good? We good on this?
Guess what?
Coca-Cola named 2024 top pick at Argus. Don't work too hard, guys. Wow. Bold call.
Dude, if Coca-Cola's the top pick, this market's in trouble.
That's a hot take.
I don't know anything about their general market outlook, but if they're bullish and then they're telling you that their top pick is Coca-Cola, I would be pissed.
Like if you worked at Argus, what is Argus? They're a broker?
Sell side.
Another one, TJ Maxx, also named a top pick. I like that.
Can we just talk about, we got Chris Veron on the show today. Huge fan of Chris Veron. Chris is jealous that Todd Stone's been a guest so many times. Chris is like, yo, what am I, chopped liver? I see this little inter-office beef going on there. I like it.
This is Chris's first appearance on the morning.
Debut on the morning show. All right. Congratulations, Chris. Now you're big time. Now that you're a guest on the show. Now, this is what moms are proud of out there in the
Let's bring them on.
Bring them on. Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Hey, Chris.
Mr. Verrone.
How we doing?
Is that a real background, or is that one of those Zoom things?
I'm not telling.
Oh, man.
It's pretty good. It looks pretty
good, man. Yeah. It looks pretty good. I like that.
Happy New Year.
You got a better setup than Sohn, for sure.
Happy New Year, guys.
Happy New Year to you, man. How's 2023? Good year for you?
2023 was a fun year. I think I spent 80 nights in hotel rooms seeing clients all over the world.
Wow.
I do it because all my best ideas come from other people.
Yes.
As you know, JC and Steve, you can stare at the screens all you want, but when you're in a meeting and someone says something you haven't thought about, the light bulb goes off, the neurons start firing, and all you want to do is get back and work on it. So that's why I do that. It's funny. I've been thinking about like, where do good ideas get conceived from? I think they get conceived in meetings, or when you're around other people. And also, we all spend, probably to a fault, I think we spend too much time looking at like indices or relationships or macro or I think the best ideas come from looking at stocks, right? How do you catch moves? And I think, JC, we've talked about this a long time ago. How do you catch moves early, right? How do you catch group moves early? You see it manifest very subtly in the individual names first. I know all my best calls have come from that first, and then how that translates to the index or to the macro.
Todd, in these conversations you're having, sentiment's got to be a big benefit there as well. When you're having meeting after meeting after meeting, and the same themes keep coming up, particularly themes that you've already dismissed using math in your analysis, and they keep coming up. Also things that don't come up at all, healthcare, in any conversations that you're having, right? How close am I?
Well, it's funny. I don't know if you're reading my email or my inboxes. We wrote about healthcare last couple days, hinted at it at the end of last year, as in like, listen, I know I don't know, but I get a feeling sometimes when something's percolating, and something's percolating here. We'll see what happens. And I think, listen, as you know, we're about 100 basis points above a 12-month downtrend relative line in healthcare, right? So we're just in inning one of what could be something. And that's how I want to think about this. Like, this is a very incremental business, right? I think you can be incrementally more constructive on healthcare today than you were a month ago. A month ago, you could have been probably incrementally more constructive on the group than you were 6 months ago, right? There's an incremental improvement there. But I think, JC, you raise a good point about sentiment and meetings and what you hear. My favorite setup is when something becomes so well known that people stop doing the work, right? And when you begin to see that little inflection on the charts, that's when it gets interesting. And I think there's a lot of examples of that right now. Like I find it really curious. If you look at the start of the year, last 2 days, right, the narrative is, the move out of the Qs is, listen, it's positioning or it's tax stuff or whatever it may be. Well, let's wait a second. I mean, like equal weight S&P over Qs has been outperforming for the better part of 2 or 3 months now.
That's right.
And
right.
I know you mentioned Dow. I think Dow was first to make a new high. So these changes, I don't think are 2 days old. I think they've been percolating under the surface for maybe 2 or 3 months. And then what do we know about this business, right? Things happen slowly, suddenly. As far as the broader sentiment goes, I mean, it's a marked change from a year ago. People I think are pretty aggressive here. I'm not terribly concerned about that yet, because I still think the market justifies it. I think you have to get worried about sentiment when the market no longer justifies it. Burden of proof is probably still, I think, certainly on the bears here. Maybe Europe is the first place starting to show some little hints of unease. Like, look at these luxury stocks, right? They have not rallied here, whether it's LVMH or Kering or even Hermes, which is the best one, right? From failed moves come fast moves, right? You got to made a new high for like 2 days and gave it all back. Right? So there's a little hint of that in Europe. I think demands attention. But I'm big on reference points. Like, what would change the whole game for me? Apple under the October lows, I think, would change the whole game, right? That would be, in terms of the most important thing in the world, Apple under, I think it's 165, 166, would be a change in the character of the tape.
I want to get back to what we were talking about before, healthcare. How you could be more constructive healthcare now than maybe a month ago or 2 months ago. Within healthcare, these industry groups are very different. They're like, they might as well be different sectors. I mean, right? You've got pharmaceuticals and biotechnology, managed health and medical devices, so that you can argue are tech stocks, right? Like, you got a lot of things going on. You got small cap biotechs, and you got these mega cap, right? Are you grouping healthcare together, are you seeing broadening participation amongst these industry groups that leads you to believe that healthcare can go higher? Is it more of a positioning thing that nobody owns healthcare? Is it rotation into small caps and now you're getting a bit in biotechs? Is it a little bit of all of those? Like, can you touch on that a little?
I seriously think you've hacked my computer and read our note from this morning. It's a little bit of all of it. I think the sentiment setup, or maybe the flow setup in the sector, right? It's liquidated. Or at a minimum, all the attention's been on one stock in that group for the better part of a year. We know what that name is. Now, that name still acts fine. And I think that that's maybe one of the differences in healthcare than tech here is Apple's weakness is a little disconcerting here. Lilly's strength is noted, right? When I look at kind of group by group by group, a couple things stand out. I mean, talk about some of the big names. If UNH can punch up through here, I think it's like 560 or something, 540, somewhere in that ballpark, you're talking about resolving maybe a 2-year range. It's an important stock.
10% of the Dow, Chris.
Right?
10% of the Dow, one stock.
And then you look at stuff that has just been neglected. Anyone notice the turn in Gilead here? I'm sorry if you talked about it already, but there's a turn in Gilead here that at a minimum, if I had Gilead in my universe and I'm a healthcare PM at some pod shop and I haven't done the work on it in 2 years because you haven't have to, I would make sure the team's working on it right now because the chart is telling us something in that world is beginning to change. We had Novartis in our work this morning. I mean, if you look at the ADR there, that was basically range bound for maybe 7 or 8 months. That punched out this week. So there's some stuff percolating. I think what's notable though, right, what's the first step? First step in my process is show me you deserve to be looked at, right? Because, we all have finite time. You can't look at everything every day. You can attempt to, but that's not realistic. And you have to spend most of your time on the things that are best, right? Because, right, we make money in things that are going up. We really don't make money in trying to call things that might stop going down. Healthcare has been going down in relative terms for the better part of 12 months, some of it 18 or 24 months, depending on the cap size. What it's doing right now is step one. It's giving us a reason to pay more attention. It's been in the bottom of my sector rankings for probably 2 years, certainly 18 months. It's still in the bottom third, but I at least can justify spending some more time here. And that's kind of where I am in the gestation process in healthcare. Other things I would point out, this has been good for a while, but BSX coming out of a massive base, that's been true for some time. I think the continued strength in Regeneron is notable here as well.
I think you're in our inbox, Chris.
Well, maybe we're just both doing the work, right?
Yeah,
There's something to be said for that in this business. I think the question is some of the inverse Lilly stocks that were shot in the second half of last year that have now rallied sharply back to downward sloping 2-day moving averages. If they can correct normally and not puke again, I think it adds more credence to the idea that maybe something in the broader sector is actually starting to inflect. Now, let's talk about healthcare in context of, if you want to throw it in the defensive haven camp, right?
Do you?
Healthcare, let's think about it in that context for a moment because others do. Right. I think that's important in this business that we're very aware of how others think of stuff, even if we don't think of it in the same way.
Yeah.
So if people consider healthcare staples Utes, to some extent REITs, I would disagree, but to some extent REITs in that category, I would just know healthcare and REITs are probably the two that are most ahead of the game here in terms of actually inflecting in relative terms. Ute, there's a hint of life. Staples, there's a hint of life, but we're still talking about 12 to 18 month relative downtrends there. REITs have actually turned. And, talk about an area that just frustrates the consensus because they don't think it's worth their time is the fact that you've seen this very meaningful turn in both the relative and absolute performance of the REITs. I think yesterday, S&P 500 real estate sector had the 50 cross above the 200 for the first time in 2 years, maybe. So at a minimum, if you do what we do, you have to give it a little bit more respect.
Chris, there's one thing that you haven't mentioned, and let me remind everybody that REITs used to be financials.
Yeah.
Why do you think?
Is that a coincidence that financials are also making new 8-month relative highs?
Think of we had the Goldman chart in our work yesterday. Just look at the relative Goldman chart. Man, it looks good. Oh, but the CEO is on the way out. No one likes him. The business is in turmoil. Who cares?
Even better.
Even better. Look at some of the real crappy ones, or what people tell me are the crappy ones, right? Look at Ally. ALLY.
Citigroup. Does it get worse than Citigroup, Chris? Come on.
Wells Fargo.
I have too many scars in Citigroup. I'm going to leave that one. It's funny. Like, there are names that I think you guys know that for whatever reason you just never trade well. Citi has been one of those for me. Intel's been one of those for me, that I've just never gotten right.
Natural gas is one of those for everybody.
Yeah. Silver's generally been one of those for me. And listen, finite time, finite capital, right? And things that you just not having an edge on, find something you do have an edge on.
Yeah.
Chris, why do you think REITs trade, a little bit differently than these other defensive groups, even on relative terms?
I have no idea. Don't care. I know
That's a great answer, by the way.
I know that for what is a small S&P sector, 3 or so percent, the amount of capital in that group is far larger than the sector representation. So I think it's a much more important group than people give it credit for. I mean,
that's so. Can you expand on that? What do you mean exactly by that?
I mean, the amount of like very, very large public REIT funds is disproportionate to the amount of market cap in the S&P.
What do you think it should be if you had to put a number on it? Instead of 3% of the S&P.
I think the amount of capital that's there should kind of put it in the kind of mid to high single digit type sector, not the 2 to 3% camp that, it's relegated to the bottom with utes and materials and all the like. I think it's important, and you learn stuff from these names here as well. Now, secularly, I have no idea. The long-term charts still look like hell in most examples, but I don't have to traffic in that. I can at least acknowledge the improvement in the group relative to how people think it should be behaving, and that, again, I think that's when the best opportunities arise, when people stop doing the work because the narrative has been so ingrained in them.
I love that. A question for you. You are very observant, obviously, and kudos to you for that. One thing I noticed this year is how many equally weighted index experts all of a sudden coming out of the woodwork, right? Everybody knows everything about equally weighted indexes now all of a sudden. Just at the time that those cap weighted indexes stopped outperforming so dramatically. Another thing that I want to point out that I was dismissing all year last year was the year-to-date numbers last year specifically were very, very skewed, more than usual, because you got massive sector rotation in the first week of the year. So while generally speaking, I don't like to overthink year-to-date returns, last year in particular, those numbers were very skewed because of that rotation. Could we be setting ourselves up here where it's a lot more things are outperforming the indexes? A lot more sectors and stocks and industry groups are doing better than the S&P and the NASDAQ. Are we set up for a year like that?
So if this just kind of began in earnest 2 days ago, I'd say, feels like start of the year, refresh the deck.
Shenanigans.
Yeah. This began 3 months ago.
Yeah.
And I actually am intrigued that it's divorced from rates. I was looking at this yesterday. Since rates peaked, I think maybe October 23rd or 24th, rates peaked. And then they put in that interim low kind of on December 27th. So those 2 months, like if you look at equal weight S&P over Mag 7, outperformed by maybe 500 bips. But also since the low in rates on 12/27 through today, you have about 300 bips of outperformance from equal weight S&P over Mag 7. So I'm intrigued that it's divorcing itself from the rate environment. So it seems to be like something more than just either a rate move or a change of the calendar move. the title of our note yesterday was "Give this more respect than just the calendar." Right. I think the fact that it's been preceded by 2 or 3 months of these little subtle shifts is interesting, and I do think, call it, I don't know, given its importance as the largest stock in the world, if we're losing Apple here, or at a minimum, if Apple's just sideways or chops, that's a burden for the top of the market to outperform to the same extent it has over the last year relative to other stuff, whether you want to call it equally S&P or this sector, or just other stuff.
Yep.
I think that's interesting. I think the other thing is, like, and I try to do a lot of this in our work, is, when you look at charts, you tend to get very caught up in what does the world look like today, right? And you don't spend as much time imagining what could really change 6 months from now, or what could really change 12 months from now. Because it's really not, that's really not our discipline, right? Our discipline is, what is the message of the charts today? Will it continue or not? And I'd say that's 75% of my process. The other 25% of my process is, what could look dramatically different that's not on the charts yet? And how would I prepare if that began to happen, right? I don't need to position in that direction. I just want to be prepared. And I think when you look at, like, what I could be prepared for this year, it's not my base case, but I could be prepared for 250 10-year yields, right? Not my base case, but I could see it happening.
Sure.
What would I want to do in that environment? Not my base case.
Be long bonds, probably.
Right, but let's get back to that in a second. Other things that are not my base case that I would want to prepare for. Listen, we're seeing kind of the air come out of some of the winners. What's been a bigger winner geographically than India?
Yep.
Right. So if they're going to hit Apple, aren't they going to hit India here soon? And if they're going to bid up some crap, I think it's interesting. China was up the last week or so of the year.
I'm telling you, you're reading my inbox, Chris.
I think it's interesting. There's the old saying, when the policymakers start to worry, the equities stop worrying. Iron ore just made a 52-week high. Like, it's not my base case, but would it shock me if China put in some type of a turn here? It wouldn't. And I want to be prepared for that. So if it happens, I'm ready to go. And that's one of the things I've learned just from having the great privilege and luxury to talk to some of the greatest investors in the world, is I feel the really great ones are always prepared for when something changes. Not that they think it will change, but they're prepared for when it does. And we try to get that into our work as well.
What's your favorite place to visit? 80 hotel nights in 2023. It's aggressive. What's your favorite place?
Oh, London's high on the list. I'll be there in a couple of weeks. Oh boy, what else is good? I mean, it's hard to beat Florida these days. I'll be there next week. That's always good. Dallas is a favorite city.
Is it?
Yeah, so many great clients in Dallas. Great going there.
Where'd you grow up, Chris?
I grew up in New Jersey.
Chris, a long time ago, I tell the story, I think it was like 15 years ago. You were giving a presentation at the CMT Association, and I was all bared up at the time. And, you're going on and on and on about all these breakouts and new highs and this and that. And I remember raising my hand and being like, Chris, but what about China? Right? Because China was struggling at the time. And you're just, without skipping a beat, you're like, if you don't like China, don't buy China. What does it have to do with healthcare? Right? And that statement has stuck with me ever since. I feel like whenever I talk to you, I bring that up, has stuck with me because, first of all, you were right. Healthcare ripped from there. And China probably continued to struggle, right? But, there's separating those things. Just because China sucks doesn't mean you can't own stocks that are doing well.
I think on that front, I have a note to myself. I keep this kind of running. I don't know if anyone uses, I use Microsoft OneNote. I think it's a good, not plugging Microsoft OneNote. I use Microsoft OneNote because I like it. I
plug away
on my devices. And whenever I write something down, I just put it in that. And I have a note to myself that I always keep at the top. It says, be aware of everything, but you don't need to do everything. And, I think I think as people like us who look at charts and have the ability to go anywhere in the world at any moment and look at charts from any geography or any cap size, there's a temptation to do too much. I'm more interested in being aware and then only doing what I think is really, really compelling. For example, like I'm intrigued by the idea that China could surprise us here. But I don't think that means I might need to own China. Maybe it means I need to own more BHP, or right. I don't need to do everything, but I need to be aware of everything. And I think that's just generally a good way about going through markets.
I got two charts for you. Here's the first one. Throw up slide 2 there for Chris. The Mag 7, you know, you guys do a lot of great work with ETFs and sentiment and stuff like that. Todd talks about it all the time. You know, on November the 9th, they changed the name to the Mag 7 as opposed to whatever it was before, big tech ETF. Momentum diverging for a long time. To your point, people just assumed the narrative and stopped doing the work. This was not just the last 2 days. This was months ago. Do you think that this reversion has legs?
So my gut says yes. I don't think it's going to be as like 2022 was one direction one way, 23 was one direction the other in terms of this group of stocks. I'm not sure it's going to be that straightforward here because there's just like other stuff happening. I think at a minimum, Mag 7 is not the monolith it probably was. I don't know if you can pull it up. Look at small cap growth relative small cap value. I think it's like ROU is one of them, and
IWO, IWN.
Yeah, or yeah, small growth relative small value. Anyone know when that peaked? If you can say off the top of your head, I'll give you credit.
June 21st.
There you go. June peaked in June. I find it curious because if you look at small growth versus small value and compare it to large growth versus large value, since the inception of the Russell indices back in late 1970s, these have only diverged twice. First time it diverged was in second half 21. So in second half 21, you began to see small growth underperform small value, and it kind of preceded a change in 22. And then if you remember a year ago, even to this point in January of 23, large growth was still making new lows versus large value. But small growth, to your point about kind of an 18-month bull market, small growth had turned up versus small value all the way back in summer of 22, right? So for whatever reason, the last 2 years, this relationship or this pair has been pretty good about giving us hints in the year that follows. And I don't know if you can pull it up, you're better with the tech stuff than I am.
Yeah,
but
pull up,
even like large growth versus large value broke look at this. This peaked in June. Like that's important information. Why did this peak? This peaked because financials have turned. And look at small financials relative small tech. Look at small real estate relative small tech. Look at small healthcare relative small tech. And another thing on the healthcare front is if you're a large growth manager or even a small growth manager for that point, and you feel like you're too big in tech, where do you logically go? I think you can logically justify going to healthcare. I think it's much more difficult to justify the growth manager going to materials or something like that. So there's that here. There's that here as well. Large growth versus large value broke about a 6-month trend line the last week or so. I think that's notable as well. I'm impressed with how fast you can pull these charts up. I don't know who's on that.
You know, I looked through a lot of charts throughout the day, Chris. Throw up the new slide 3 there, Spencer. Yeah, I look at a chart or two each day, Chris, you know.
Yeah, there we go. I mean, so this is interesting to me. Like, and it kind of goes back to this idea that I do think the market has one foot in some old regime and one foot in some new regime and hasn't quite made up its mind yet on not like whether up or down is the right call, but just what the character of that move and what the leadership of that move will ultimately look like over time. And, you know, if you look at the great style regime changes in history, they don't get measured to a day, right? They're like these 3 or 4 year wars where both sides are just dueling about ultimately who's going to carry the torch of whatever the new regime or new baton is. And I think we're dealing with some of that here in terms of the leadership stuff. Like, let me ask you to say, would you be more surprised if energy made a new 52-week high or a new 52-week low over the next 6 months? I'm just curious your answer.
I would say I'd be more surprised if it made a new 52-week low, especially because we're so close to new 52-week highs. So there's a little bit of that. Throw up the chart, the next chart there, Spencer. This one coming across our desk yesterday. Marathon Petroleum breaking out to new all-time highs. Leaders are leading, Chris.
We had its sister in the note this morning. We had Phillips in the note this morning.
Yep.
I don't know if I'm comforted or concerned that we're looking at the same stuff, because I have found when all the technicians look at the same stuff, you got to watch your back a little bit. So
it's not the technicians, Chris. It's just you and me, bro.
You know what's funny is I'm always asked, what's your best indicator? What's your worst indicator? My best indicator is my PA. When I'm making money in the PA, I'm generally seeing the ball well. When I'm not making money in the PA, I'm doing something wrong.
How active are you in the A account?
I try to be as active as possible, and I really try to.
And you have the freedom to do anything you want, no problem?
I largely do, and I try to make sure all of our research really reflects how I'm positioned personally, because if it didn't, I would feel unauthentic or disauthentic, right? Whatever the word is.
Yeah, and also why, people are like, oh, he's just talking his book. It's like, well, whose book is he supposed to talk? You know what I mean?
Yeah, no, I couldn't agree more.
All right. Listen, Chris, man, always a pleasure. This was fantastic. I wanted to finish up here with energy. That's why I brought up the marathon chart. You did it for me. Energy outperformer in 24?
So at the end of the year, last year, I don't like the sell side habit of like putting out all these guesses for next year, and all right. It's like classic sell side stuff.
It's marketing. It's
what's
business.
funny
It's
is
showbiz, babe.
like guesses lists have all moved up in time. It's like it used to be like you put them out in, I don't know, mid-December. Now you're starting to see like next year forecast in like October. Like, whoa, let's chill a second. I wrote something though at the end of the year. It was basically like what I learned this year. What could I have done better? What am I happy about? What are some things that are on my radar for next year? And one thing that caught my eye in terms of the clue, I do find it interesting that Saudi stocks never went lower with crude the last 4, 5, 6 weeks. I don't know if you've caught that.
Yeah.
And it just seems like if the bears don't kill energy here, I wonder if they're going to miss their chance to kill it. Because they had every reason to, right? You had a lot of big names that were breaking, but I just find it curious they haven't been able to kill it yet. Now that could change, but they haven't been able to kill it yet. I like that Saudi relationship. It was helpful. I remember looking at that in 2020 when crude kind of went to zero for that fake moment in, I think, April of 20. Saudi stocks had already been going up. And then if you remember in early 22, when everyone got over their skis bullish on crude, Saudi stocks weren't confirming that they had already broken down. So for whatever reason, and I don't pretend to know the reason, other than Aramco is the largest weight in the Saudi index, the Saudi market seems to be telling a different story. So again, be aware of everything. Don't need to act on everything, but I'm glad I'm aware of that.
Do you use KSA to look at the Saudi stocks, Chris?
The TASI.
Help me out on KSA. Is that
it's the iShares MSCI Saudi?
Oh, the ETF. I just look at the Towel Dual Index, or however you.
The TASI, Towel All Shares Index.
Yeah,
that's
don't crucify me for my lack of.
Listen, there's not a lot of Saudis in New Jersey. You got Italians.
No,
not a lot of Saudis.
Not too many.
Where in energy services, producers, refiners, integrated.
You know where the best. Well, let's put the refiners for aside for a second because it's clear. I think they're the better charts. But you know what? Like are some of the better long-term charts? Look at the international names. Like they really never deteriorated or broke down to the extent some of the big U.S. integrated did over the last 2 or 3 months. I think like obviously Norway's energy focused. You have the big one in Italy, obviously Shell and the like. They're better than many of the others. So just on my radar.
How about Canada?
Canada's another one of those markets I tend not to get right for whatever reason. What I like in Canada right now is like the resource stuff. This is on my radar for here, like now and this year. Another group that that the Bears were unable to kill last year was like copper related stuff, resource related stuff, and man, they tried like 5 or 6 times.
Yeah. Yeah.
Like look at the Southern Copper chart. Can you bring that up? Look at like a 10-year chart of SCCO.
Dude, Latin America.
What if this
You want to talk
breaks
about
out?
things on the radar.
What if, I mean, Latin America isn't even on the radar. It's in the book, right? I mean, Brazil's been leadership for a long time. You've had Mexico. I mean, talk about Brazil for a second. Name another place in the world where you're getting paid on the stocks, the bonds, and the currency. Sounds pretty good to me.
Poland.
Look at Vale. Vale, obviously an important way there. Brazilian banks all trade well. South Africa trades pretty good here. Maybe coming out of about an 18-month downtrend. Look at USD/ZAR. So you're getting the currency benefit there as dollar breaks down versus ZAR. I'm really curious if Aussie USD can put up a fight near 66, 66 and a half.
Chris, they make fun of me all the time when I bring up the emerging market currencies. They're ripping me all the time. So thank you, sir. You see, I'm not the only one.
Well, you paid me $20 to say that, right? I'm just kidding.
All right, listen, we know you're busy. We'll let you run. Chris,
Thanks, guys.
love you, man. Thank you for being
Have a
here.
good
This is
one.
great.
Be well.
Got some great reviews from the chat. We would definitely get Chris Veron back.
I
Yeah, well,
told you he was the
a lot
man.
of
I wasn't
positive
making it
feedback
up
there.
when I got all excited that Chris was going to be here. You know, he is
A
the
lot
man.
of positive feedback.
Great points about this Saudi Arabia leading crude oil. Love that.
Chris looks at all the stuff that I'm looking at. You notice? You see that I'm not crazy?
Huh? Oh yeah.
He brought up the Brazilian real. Wasn't me. He brought up the South African rand. Wasn't me.
It was like there was an echo in here or something.
Just saying. Just saying.
All right, 9:33.
Didn't even mention the Zloty, though.
No,
A
we
little
didn't.
rude.
No
Opening
love
bell-
for the Zloty.
No love for the Zloty from Verrone.
You know, the reason I asked about Canada, this Canadian natural resources looks a lot different than these other energy stocks. Check out the CNQ. Nice.
Look, yeah, I mean, listen, it's been coming up on our International Hall of Famers for quite some time with all the relative strength.
And what Chris was basically saying about energy, he was saying, I think he used the words, they can't kill it. There are these multi-year ranges that do look like tops right now that just won't complete, right? They won't break down. Look at something like Oxy. That's a really clean one, right? Against that Buffett level that we always talk about. It won't break down. And Oxy is not the only one. It's just a really good example.
What I would encourage everybody to do is go look at monthly charts of oil services, refiners, look at just in general energy names. You know where you're going to find? You're going to find a straight line up from the 2020 lows.
Yeah.
And then a consolidation over the last 8 to 9 months, like triangle consolidations. These are textbook. I don't want to get all Elliott wave on you, but classic wave 2 after that initial thrust, getting ready for a wave 3, which if you guys have studied your Elliott wave principle, tends to be the largest and the longest. So if we do get a resolution higher, energy breaks out to a new all-time high finally, because it's been stuck in this range for 15 years. That's your wave 3. That's a very powerful wave. Throwing that out there.
These stocks, you make a good point, off of those 2020 lows, like a rocket ship. And then really since first quarter, maybe May, April of 2022, just nothing. And comment in the chat, what about CLF? Cliffs is not an energy stock. It's a steel maker. But these metals and mining stocks, stocks like Cliffs and even the index, XME, same thing that you just described, JC. Really nice rally off of the COVID lows, and then just a lot of sideways. So when those ranges resolve, should be good.
I mean, you're looking at a 15-year base in the XLE. Let me just pull it up here. I've got it handy actually. 15-year base in the XLE. I mean, it's not nothing here.
The way things are looking right now,
Slide 2.
energy is your early leader, I think. Let me Let me double check
Let
that.
them dance. Let them dance.
Well, for 2 days, sure.
I'm just saying. Energy. My equal weight energy index is up 2.5%. It's a lot more than the next best sector.
You want to know, Strazza, you want to know what day energy started to outperform?
Tell me.
Mid-December when the new 52-week highs list peaked. You think that's a coincidence?
Oh, that's great.
Yeah.
That's great. Like December 14th, 15th?
13th, I think, something like that. It was like within 24 hours of the peak.
I was just thinking about that day. Look at the Russell 2000. It filled that gap from that was the December 14th big Fed meeting. It was the FOMC announcement. And so we had a gap.
You guys love your FOMC.
It's FOMC gap fill.
Dude, you guys
Not
love
just
your
any
FOMC.
gap fill.
I mean, I've seen it enough times where these turns happen on these Fed meeting days. You know, I mean, once is a coincidence, maybe twice, but
Okay.
well, tends to happen. I don't know. Just
So,
saying.
okay, guys, let's play a game. We have had 2 trading days and 7 minutes. What is the top performer in the S&P 500 this year?
Oh God.
JC,
United Healthcare?
You know, that was UNH was my guess.
No. Go back to what we were just talking about.
Well, Marathon Petroleum?
Yeah.
Best performer in the S&P 500?
Look at these last 3 candles. This thing's breaking out. Again, breaking out in what's been...
Dude, the year started like Tuesday. Some people haven't even gotten back to work yet. Let them dance.
insane.
All right?
Insane.
Let them dance. And Chris made such a great emphasis. He mentioned it like 3 times that what we're seeing the last couple of days is not anything new. This started months ago.
Yeah. No, I
And
like
he
that
even
point.
said, he's like, if it was just the last couple of days, you know, how much weight do we give it? The fact that it started months ago, you give it more weight.
Fine. Good. Wow. Verizon looks good.
Said
New
no one
highs
ever.
list. New highs list is it's not empty. That's for
Somebody
sure.
was saying yesterday that the new highs list made him feel like if the market was up.
Dude, I mean, a lot of healthcare, a lot of insurance. Look at Allstate, great breakout. Citigroup,
You're definitely in
here.
good hands with that one.
new 52-week highs. JC loves these insurance names. Progressive, another refiner. It's Phillips 66, PSX.
Yeah, it's basically energy and a couple of financials and healthcare.
And healthcare.
That's it.
Hartford Financial Services. You know that's insurance.
May I? Yeah, right. May I remind everybody that healthcare is the largest component of the world's most important stock market index, the one Dow Jones Industrial Average. Healthcare representing 21% of that index. United Healthcare, a single stock, represents 10% of the Dow Jones Industrial Average. And if you're one of these S&P people, healthcare is the second largest component of the S&P 500 after technology.
Good.
All right. Well, since we're talking about 52-week highs, let's talk about a 52-week low for a second. Disaster stock of the day.
That's a downer. There you go. Being a downer
Yeah.
again.
Oh,
Disaster
Debbie
stock of the day
Downer.
is
Wah,
MBLY.
wah.
MBLY. They don't have an alibi. That was terrible this morning. They pre-reported, gave some guidance. They said that there appears to be a bit of an inventory glut with their current
Which stock is this?
Mobileye.
This was the Intel acquisition a few years ago. Then they spun it off again into an IPO. Anyway, a bit of an inventory glut. So what they did was they said that their Q1 revenue will be down about 50% year over year, but the revenue for the rest of the year will normalize, and it will actually be flat to up mid-single digits. Regardless, Q1 down 50%, not a great headline, not what you want to see. Stock down, I think, around 22, 23% this morning. Like I said, new 52-week low there. Couple other headlines on my, oh yeah, there's a chart, by the way. So again, recent IPO, not too much action, not too much history, I should say. But there you go. Disaster.
There's been no reason to own this thing anyway, so let it go to zero, right? There's
Okay.
been no reason to own this.
Elsewhere, we've talked a lot about healthcare today. Cigna is in advanced talks to sell their Medicare business. This is a business that is valued at $3 to $4 billion. They're going to sell it to Healthcare Service Corporation. So they're
How come Pfizer and Moderna have been up so much? Is there a
By
new?
the way, Mobileye, Israeli company.
Yes, I knew that.
I did not.
Oh.
What was that move in Moderna the other day, Spencer? Do you know?
What was that move? Yeah, there was a headline. I think it was a. Oh, there's so many things with studies and trials happening with Moderna. The mRNA platform. Yeah, what do they say? Oh, there was I saw something, but there's like 4 things a day on Moderna. Honestly,
No.
it's hard to keep track.
One that popped out to me. TikTok and Peloton partnered.
Yeah, I didn't get there yet. Right, that was the last one I had on my list here. Was Peloton announced a partnership with TikTok. It's called TikTok Fitness, powered by Peloton.
I don't understand. What is it?
I guess you're going to be able to watch select Peloton classes and do other things related to Peloton on TikTok.
This is the stupidest thing I ever heard.
Yes.
Well, aren't you really young people on TikTok? They're not using Pelotons. That seems like
nobody is using Pelotons, young or old.
Better point. That's
This is like one of those, like,
so stupid.
We all, we suck. Like, what can we do? Like, we'll do anything. Who wants to do business with us? TikTok, done, sold to you. Right? It's one of those kind of things.
Mm-hmm. And thank you, Joe. I think it was the Moderna thing was a positive cancer headline.
Yeah, Hail Mary.
Peter says this way China can watch you work out.
That's
probably true.
Yeah, Truist Financial Corp up 2.2% on positive comments from BAC, Bank of America. Don't you love it when one bank comes out and says nice things about another bank, and then that bank stock price goes up, and they could come out and say nice things about the other bank that said nice things about them? Right?
Another day, another 500 ratings. So many this morning.
Here.
Anything good? Analysts really justifying their employment, like, really coming out hot.
Yeah, and Bank of America said something nice about Truist, Steve, but they said something not nice about State Street, and I don't know what this one is. That's not a bank. Never mind. Okay, but
I didn't think Verrone was going to say London.
Yeah, me either.
London's all right. I mean, it's cool. Don't get me wrong. But favorite?
Any London Rex. My dad will be in London starting on Sunday for a week. So
yeah, eat the Indian food.
Okay.
By the way, don't tell an Indian guy that London's got great Indian food. Oh, wait, I made that mistake before. They do not like it when you say that.
Wait, you're going to London, Spencer?
No, my dad is. I'm not.
Oh,
yeah. So anyway,
there's this old bar. I think it's like the oldest bar in London or something like that.
In the world, I've heard of this. Yeah,
it's called Gordon's.
Oh, okay.
And it's like this cave, and it's like a wine bar, and you get like prosciutto and cheese and all sorts of yummy little snacks. But it's a wine bar, and it's like in a cave. It's called Gordon's. It's dope.
All right.
Really cool. Tell them to go there.
Okay. Hey, we have Sean here.
Hold on. We missed one. One more. Can we get this chart too? CPE, another deal in the oil and gas space. So Apache, I think it's APA now, but this is the old Apache Corporation. JC.
And this was Anadarko.
Oh, right. That whole thing.
Anadarko got bought. This is Apache. I'm pretty.
Yeah, Apache and.
Right. But Anadarko and Apache merged because that's the old Anadarko ticker.
No.
Right?
It was ADA, I think. But yeah, they merged.
Apache was always different. Anyway, they're now buying another one. I don't remember. There were too many of these companies.
Calon Petroleum.
This is an all-stock deal. So it means APA and CPE will just trade with each other now.
2.2 billion.
It's a $2 billion E&P out of Houston. They got a ton of these. Expect more.
Stock's barely moving.
Dude, $2 billion Houston E&P. Like, that's what they do in Houston. Like, there's going to be more of these buyouts. Look for it.
If you do trade these deals, the exchange ratio on this one is 1.0425. So that's how you figure out what Calon should do. You take Apache, APA, you take the share price, multiply by 1.0425. There you go. That's what CPE should trade at going forward. All right.
Well, yeah.
Sean. Shawnee, baby.
What's up, fellas?
The Dow, world's most important index.
Are you sure? Because when I read the headlines, that's not what they're talking about.
Well, the people that write those headlines know nothing about the market, and that's why they're at an office writing headlines.
Oh, okay. All right. I'm just seeing a lot of Santa Claus didn't show up to play this year.
No Santa, no show for Santa. Santa was busy in China. That's where he showed up. China up 2.5% during the Santa Claus rally period. The Dow also positive for the Santa Claus rally period. For those interested in that sort of thing.
Well, there are a lot of disappointed people to start the year in certain pockets, but one area where they're not disappointed has been healthcare. So let's talk about that.
Please. I love when Sean coming out hot, wanting to talk about healthcare. Who is this guy?
Well, yesterday, in our meeting, we were talking about, what kind of trade we wanted to put on here. And the first question you asked me was, how aggressive are you feeling? And I told you that I'm looking for opportunities to be aggressive, but I'm not necessarily feeling all that aggressive right here. And I threw out a couple trade ideas, one that was a little bit more on the aggressive side and a couple that were a little bit more on the, conservative side. And one I had not considered for a more conservative bet was Pfizer. So we were all talking about healthcare and how we've seen some big runs in Merck and Amgen. I don't know if you guys have those charts queued up, the Merck and Amgen charts, but let's start with those.
Merck is ripping.
Right. Merck and
Amgen just looks like Regeneron,
Right. So I guess we don't have charts for those. That's a bummer. But you guys could all pull them up. Those charts have been ripping. We do. Okay.
We have the charts, Sean.
There they are.
Look at that.
So great end to the past year, great start to this year. And, generally speaking, maybe I should just speak for myself, but I think this is true for all of us. We generally like to position ourselves in the leaders, right? We like to buy strength. We like to buy stocks that are breaking out to new 52-week highs, new all-time highs, things like that. Still my favorite trades, but Merck and Amgen right now, the chart we got up here is a 50-year chart. This Amgen chart's a little bit more what I'm talking about. Yeah, this chart here. Forget this Merck chart. I don't care about 30-year charts.
You should.
You don't care about that base?
Yeah, come on, Sean.
If I was a long-term investor, I would, but I'm a short-term trader putting on 6-month trades.
You care. You might not realize how much you care, but trust me, you care.
Okay. Well, we looked at this Amgen, we looked at Merck, and they've had great runs. And the question I had for you guys was, if the stock market pauses here, or God forbid falls back a little bit, has a little bit of a correction. I'm not saying that's happening. I'm certainly not laying that out there that that's happening. But I'm just saying, what if? And if that happened, would a stock like Amgen or Merck get hit harder than a stock like Pfizer? Let's bring up the Pfizer chart that hasn't really rallied yet with these stocks. And the argument that I think we all agreed on was, well, Pfizer's gotten walloped over the last 2 years post-COVID. So I think most of the starch has been taken out of the bears at this point, and that little what we think is a fake out breakdown there. That level is a key level. You can see there that support level goes back to 220 or 2020. But if we had a further chart, you would see that level has been support for over a decade. That level has price memory, and I'm not saying that level is going to hold forever, but I'm willing to bet that it's going to hold here, especially with its friends like Merck and Amgen and other stocks in the sector that are all ripping, making new 52-week highs and all-time highs. This feels like a good risk-reward bet in Pfizer, and we have a very a nearby stop loss level to lean against for risk management purposes. But this is the name we went in, and if this thing wants to play catch-up, it's got a lot of runway, a lot of room to go to prove itself. So I like this trade a lot. We put on what many might consider it to be an aggressive bet. We did a bullish risk reversal, meaning we sold some puts to finance the purchase of calls. Yes, that might be a more aggressive or risky position, but considering where we're at in this chart with the support level that we see with the stop loss level not being that far away, to me, it doesn't feel like that risky of a chart or risky of a play. But the benefit, if we get it right, will be tremendous.
And what strikes here, Sean? Because Pfizer's not exactly the highest beta.
So we
stock.
bought June options. If you want to bring up that, it looked like you had that P&L chart. I saw it. There it is. We positioned in June, and we sold the. This is one of those stocks that has these weird strike prices where they have like $0.50 strikes. So in this case, we sold it.
Why is that weird?
It's just unusual. It looks weird. You know,
You
there's
see
so
it
many
all
stocks.
the time, though. You see it everywhere.
It was more common when stocks were trading in fractions, not so much anymore. Usually, it's
Not
just
all of us are as old as you are, Sean.
Okay. So we sold the June 2750 puts, and we used those proceeds to buy the June 3250 calls. Did it for a small net credit. I think my net credit was 5 cents all in. That's not the profit I'm playing for, but the nice thing to know is that if Pfizer just languishes here and doesn't do anything, it doesn't trip our stop loss level, and it doesn't really take off. Worst case scenario is both options will expire worthless. We keep the 5 cents for the trouble. Again, not what we're playing for, but when I put on risk reversals, I do like to build in a small little net credit. If for no other reason, it makes me feel good.
Yeah, I like this one.
I like the things that make you feel good, Sean. You know, got a big game this Sunday. Buffalo 3-point favorites. Road favorites.
Well, you could call it a road game, but I'll promise you there'll be more Bills fans in that stadium than Dolphins fans because Dolphins
nobody
fans
wants
don't
to be
show
in
up.
fucking Buffalo in January.
How JC flipped it around.
Struck a nerve.
No, there's always a lot of Buffalo fans down in Miami for the late games. Not so much in September because these pale people from Buffalo can't handle the heat in September. I used to go as a
justify it
kid.
any way you want. The fact is, Dolphins fans don't show up.
That's not true. I don't know why you say that. They sell out every game for decades and decades and decades, even when they sucked.
All right, we're gonna have to go to the tape on this. We're gonna have to start reviewing, what the stadium looks like.
All I know is
quarter.
when I was a kid, I had season tickets to the Dolphins when I was a kid, and these angry Buffalo people would come once a year, and like they're like milky, pasty white. Like you could hear the bacon frying like on their skin in
Do you
September.
realize that the sun doesn't shine in like a good part of this country for like 4 months, 5 months out of the year? The sun just doesn't come out.
All I'm saying is that I was a little kid. I knew nothing. All I would see is these overweight, really, really pale people coming in and just literally frying. Like you could see them turning pink and like their like skin bubbling. I remember observing this. It was wild. It was fascinating. And I used to question. I'd be like, who are these people?
Look, you're not wrong.
How are they so fat? I remember.
You're not wrong, but that's not limited to Bills fans. You saw the same thing when the Patriots fans came to town. You saw the same thing when the Jets fans came to town.
The Buffalo really. I swear to God. I swear. I'm not making fun. It was specifically the Buffalo fans. I'm telling you.
I mean, look, you're not wrong. I'm not disagreeing with you. You're not wrong.
Are we done picking on Buffalo? Because Sean,
for the record, I love Buffalo. The wings are great.
Right.
We used to play Niagara and Canisius every year when I was in college. Big fan.
Sure, you sound like it.
Yeah.
The odds to win the Super Bowl, Buffalo, if they lose this weekend, from what I understand from Sean, they could be out of the playoffs, depending on some other wins, right? But they're the third favorite in Vegas to win the Super Bowl right now.
Yeah, the Bills are in a really weird place. I guess we just jumped into a recess, guys. Sorry, Spencer, but the Bills are in a really weird place because if they win this weekend against the Dolphins, they will be the number 2 seed, which is great. But if they lose, they could potentially be completely out of the playoffs, which is crazy. Crazy.
That's why they're the favorite. They really need to win this game.
Well, they've won like 5 in a row, right?
That's also why. And the Dolphins prove just over and over and over again that they have no ability to win a big game late in the year.
They just beat Dallas last week.
Well, what's also crazy, JC, is depending how things shake out, there's a real chance that the Bills and Dolphins can also meet again first game of the playoffs, which is
crazy. Same thing with Baltimore too. Like it's like, well, we're gonna have to be. It's always who wins the second time. But in this case, Buffalo needs to win to even get in. But and for all of these, it's who wins the second time they play that really counts. So
I never like those immediate rematches. It's worse in college football, but it's terrible in NFL.
They happen quite often.
I know. I never like
it. Reminds me in 07, I think it was 07, the whatever year the Patriots were undefeated, they played the Giants last game of the year. Remember that, Steve?
Yeah.
Patriots barely won that game, like by the skin of their teeth.
That
And then they rematch in the Super Bowl.
Yeah.
Giants get them back.
That's right.
That
So
game-
wins the second time.
I always say it. That game is what won the Giants the Super Bowl because I was
Right.
there. I was at that game with 2-3 minutes to go. It really looked like the Giants were going to win. So that gave them the confidence to move through the playoffs and go back and beat them because they're like, we could beat these guys.
Right.
So that was
All right. I'm going to run the recess bumper. Let's
Please do.
just, even though we've been doing it already. Whatever.
I will be spending my day in my favorite city in the world,
Buffalo?
and that is is Buffalo even a city? It's like a small town, like somewhere near Canada. No one knows where that is.
It's an
I will
extended
be in
suburb of Toronto.
New York City, and I'm gonna go hang out with our friends Josh and Batnick. Joe Fahmy's a guest on the show as well, so it's me, Fahmy, Josh, and Batnick.
I don't know how
So this
anyone's
is
going to
gonna
get a
be-
word in.
That's going to be a fun one.
It's gonna be a fun one, and then we're going to dinner, and then we're gonna meet some other friends for drinks. Big day. I'm thinking sushi with Fahmy, a little pre-show sushi sesh.
Yeah, do
Little
that.
omakase. See what
Cool.
happens.
Nice.
Michael Batnick will be on this show on Wednesday.
Nice.
So that'll be fun.
All right, I got a little something for recess. Strazza will appreciate this. So at my house this year for Christmas, the big Christmas gift that I gifted to the family, bidets.
Yes. How does it work? How does it work? I've been waiting. to
And this
hear.
was all because of our trip to Asia. Strazza and I had life-changing experiences with bidets in Asia. And I went online and I purchased bidets from a company called, I'm not promoting them, but a company called HelloTushy.com.
Yeah. So my whatever YouTube obviously is listening to our conversations. Now I'm getting advertisements for it. I see the commercials now.
And even a non-handy jamoke like me was able to install it, no problem.
Let's
And
see.
it's great.
It goes on top of the toilet. It's like an add-on, right?
Right on the side there.
Yeah, it's like a little
okay.
rail. You have to take off your toilet seat, and then you install this rail, and then put the seat back on top of it.
Mm-hmm.
Easy peasy.
But is it good?
Cool.
So it's good. It's not as great as the experience I had in Asia, and here's why. This is something I've never thought of or had to think of before. But at my house, I didn't know this was a thing, but we have round toilets
Yeah.
versus the elongated toilets, which are more common these days, apparently.
Okay.
And it works better on the elongated toilets because there's a little bit more room for it to work.
Uh-huh.
It's with the round toilets, at least the one I got.
It's a little tight. in
Round
there.
toilets, it's like a little tougher to get the angle. You kind of
Yeah,
have to
okay.
work it a little, but we figured it out.
Okay.
You
Yeah.
know, I like how in Japan, when you walk into the bathroom, you get like a standing ovation and the toilet seat just opens up as you walk towards it. That's pretty sweet.
Great ad here. Speaking of Asia, I have an Asian one. I will be spending the afternoon with our friend from Singapore, Karen, who Sean hung out with.
Everybody's hanging out with this guy.
Yeah, it's Karan. Let's get it right. It's
Karan.
Karan. Karan and his lovely wife Sarah came out to Colorado during Christmas break and got to take him up to Rocky Mountain National Park. We did a little hiking. We did some sightseeing. We hit a couple restaurants. Great time. Karan's wife is way cooler than he is, by the way. Unfortunately, Strazza, you're not going to be able to meet him or meet her because I think she flew back to Singapore already. So it's just Karan. I could be wrong. But hey, Karan is a customer of ours. He's a friend of ours, and we hung out with him in Singapore. And all of you will get to meet Karan when our Asia documentary finally comes out. He's one of our featured interviews. Man, great time. Great guy, and we had a great time last week.
Love it.
All right, before we go, my recess is a trivia question. According to Austin Karp, he's a reporter for the Sports Business Journal, 96 of the top 100 most watched TV broadcasts in America last year were football games. Anybody want to guess what the other 4 were?
Well, hold on. Before we answer that, what football games? I'll bet you the Buffalo Bills were in 2 of those 3.
perhaps 93 of the 96 were NFL, 3 were college. So 96 out of 100 were football games.
That's wild.
The other 4, anyone want to guess?
I have no
And
idea.
no takers.
Oh,
All right.
there was a big one that I'm not thinking of. Something.
I only watch sports, so I have no idea.
Okay, the remaining 4 were the Thanksgiving Day Parade.
Yeah. It's
Wow.
on the list.
Really?
It's on the
The
list.
yes, the State of the Union,
Really?
which makes sense.
Yep.
The Academy Awards, and this last one's my favorite. An episode of Next Level Chef, which aired directly after the Super Bowl.
Nice. Yeah.
That's just because people were too lazy to turn off or change the channel.
Funny
That's
how
it.
that works,
That's-
Sean. Funny how that
That's
works.
funny. All right. That's it for us here today. It's Thursday, so we're doing Chart Request Live at 1 with Strazza and Pat. Options Jam Session with Sean an hour before that at noon. JC, good luck in New York. And everyone, smash the like button, please, and thank you. Jeff Hirsch is the guest for tomorrow's show. So we're talking seasonality, of course, with the master himself.
Great.
Stay tuned for that. Like and subscribe. Do all that great stuff. Go make some money. We'll see you later.
Adios.
Run it. I can't take no loss. I don't even know what it costs. I hit the